Hey guys, so I think it's safe to say that the last few weeks have definitely been quite volatile for the stock market, and a lot of stocks, especially growth stocks, have been hit quite hard, with many suffering quite significant price drops in the recent weeks. So there is a good chance that this volatility is likely to continue into the next month or so, and this will present some nice buying opportunities to buy into stocks at a discounted price. So with that being said, in today's video, I'm going to be taking a look at a few stocks that I personally really like the look of. They are quite high growth stocks and they've all been hit quite significantly in the recent market dip. So I will be taking a look at what the company does, why they might have dropped in price recently, and what makes me think they are a good buy to get into right now for the long term. So just before we get into the video guys, please remember to leave a like if you do enjoy this video. It really does help me out a lot. And also if you do want to see more videos like this in the future, please remember to subscribe too. And apart from that, let's get right into the video. So first up we have WORKHORSE stock. Now this is one that I've covered a few times on my channel before. In fact, all of the stocks I'm covering today, I have made full videos on them in the past, where I go into a lot more detail than I'm going to look into in this video. So if you are interested in any of these companies in more detail, please go back on my channel and have a quick look. So for those who don't know, WORKHORSE are an electric delivery vehicle company that currently produce last mile electric delivery trucks. They also have a delivery drone in the works, which is currently undergoing an approval process. Now they are currently in the running for a very large USPS delivery vehicle contract that is valued at over $6 billion for over 165,000 vehicles in total. Now the USPS contract hype has largely been responsible for the WORKHORSE stock growth over the past few months, where we have seen the stock go from $3 at the start of June to reaching heights of $30 per share in late September. However, the USPS contract is also one of the main reasons why the stock price has slumped down by over 45% since these all-time highs were hit, where it is now being traded at around $16 per share. Now, this is because investors had been expecting the contract to be announced around October time. However, recent communications have suggested that the announcement won't happen until the end of 2020, which has casted some fear and doubt in many investors' minds, which has caused them to sell off. So there is definitely no denying that WORKHORSE is a very risky stock to buy into for the short term, as failing to secure any of the USPS contract would send the stock price plummeting. However, I personally believe that now is quite a good price to buy in at. The stock is now being traded at prices which we saw in early July and late August, which is obviously a fair few months ago. And since these times, we have seen a number of very encouraging developments take place for WORKHORSE as a business. So in this time, we've seen the number of contract candidates be narrowed down to just 3, the hiring of over 200 mechanical and electrical assembly workers, a strategic partnership to be formed with Hitachi, and also a $200 million loan that they've secured in order to help with the financing of the business and for the growth of the business. On top of this, we have also seen the highly respected ARK Invest continue to add to their position in WORKHORSE for their ARK Q ETF. So for me, it's clear that the electric vehicle market is only heading in one direction in the future, and that is upwards. The industry is growing fast every year, and it is predicted that 50% of America's delivery vehicle fleet will be clean energy powered by 2025, up from 23% today. So I personally believe that even if WORKHORSE do not win any of the USPS contract at all, they are likely to go on to be a significant player in the electric vehicle delivery market further down the line. And I think that now is definitely quite a good chance to buy in and get some shares in WORKHORSE. So next up we have the SPAC stock, which is SWITCHBANK Energy, who are going to be merging with CHARGEPOINT. So CHARGEPOINT build electric vehicle charging stations and are currently the leading independent player in the market, with hundreds of thousands of charging stations around the globe. So CHARGEPOINT are in the process right now of merging with the SPAC SWITCHBANK Energy, which is currently being traded under the ticker symbol SBE for around $13 to $14. Now the deal is valued at $2.4 billion and it is expected to be finished by the end of 2020. So the great thing about ChargePoint is that they are already a well-established company in the electric vehicle charging industry who generated $147 million in revenue in 2019, and they also have over $600 million in cash available for future business developments and growth. They do also have some partnerships already in place with some big-name car companies like BMW, Mercedes and Toyota. And on top of this, 60% of companies in the Fortune 50 are currently ChargePoint clients who are benefiting from their services at their offices, buildings and retail parks. So this is definitely very encouraging to see. So the electric vehicle industry is rapidly growing every year, and this means that the need for electric vehicle charging stations also increases every year. So more and more governments across the world are introducing regulations and incentives to encourage electric vehicle usage, and 67% of all vehicles sold in Europe are expected to be electric by the year 2025. So ChargePoint are aiming to have 2.5 million charging stations available across the globe by 2025, which would be a massive growth if they did achieve this. So SPE stock has been on a decline recently. It spiked in around mid-October at $16.20 per share, but has since been dropping, and it has dropped over 15% to around $13.50. So the stock is particularly volatile and has spikes up and down quite often, but this is the lowest it has been since late September, and the merger was only announced on September the 15th. So it is at a particularly low price right now. So it must be said that this stock is definitely quite risky in the short term. The ChargePoint merger has the chance of collapsing at any point between now and when it is finished. Now, if this does happen, then SPE stock will drop quite a lot, and it's probably going to go back down to the $10 price, which is the price it was at before the merger was announced. But with that being said, if the merger does go through successfully, then I think it's all upwards from here for ChargePoint. The market size is only going to be getting bigger every year, and ChargePoint does have the cash available to expand rapidly. So my final pick for today's video is Virgin Galactic. Now, Virgin Galactic are the world's first commercial space line and one of the only space-related stocks on the public market right now. They plan to run a regular schedule of space flights for individuals who want to get an experience of a lifetime to visit space, as well as for scientific researchers who are wanting to go up there to perform experiments and gather important information. So when flights do become available, the initial price for a ticket is set to be $250,000, meaning that space tourism will only really be available for the super rich. But this is still a significant amount of people. So with an addressable market of those with a $10 million or more net worth, there will be over 2 million potential customers for Virgin Galactic to target. So they are not generating any revenue as of right now, as they are still waiting to get full approval for flights to start. However, it is predicted that 650 passengers will be flown in 2021, with this number expected to increase to 1,500 in the year 2023. So the stock is down to around $17.50 per share from $23.03 per share just a couple of weeks ago on the 20th of October, which is more than a 20% price drop in total. Now, this is partly due to an overall market sell-off that most stocks have experienced, especially growth stocks in recent weeks. However, the drop is also partly due to another reason, and this is that Virgin Galactic need to run a number of successful FCC-approved test flights in order to gain full commercial approval. Now, they recently announced that only the VSS Eve aircraft had performed a successful test flight, which is only the carrier plane to take their main aircraft to the right altitude. Now, the main aircraft, which is called the VSS Unity, did not get another successful test flight under its belt at all, which is the main vehicle which will be used to perform the space trips. So Virgin Galactic did announce that they do still plan to conduct a test flight for this aircraft, which will take place later this year and will be done before the end of the year. So it's definitely not all bad news. However, investors did not particularly like this news, as it further delays gaining full commercial approval, leading to some investors selling off their stock. So Virgin Galactic are one of the only stocks you can own to gain exposure to the space industry right now, and even though they are not actually generating any revenue just yet, in the near future they should be up and running. Now, space tourism has massive potential to become a big industry, in the future, with Virgin Galactic in a great position to be one of the main players in this industry. In the short run, I do believe that there are still some risks with this stock, especially with the licensing and the technicalities behind that. And the stock is quite volatile in general, to be honest. However, I do think that this dip is a good opportunity to buy into the stock and bring down your cost average if you have already invested in them. So that is all for today's video. Please do remember that these stocks that I picked are just my own opinion, based on my own research, and you should definitely not be buying a stock based on what I'm saying, as I'm not a financial advisor. All of the information in this video is for purely entertainment purposes only, and yeah, as I said, you should research your own. You should do your own research before you look to buy into a stock. But with that being said, please remember to leave a like on the video if you do enjoy it. Also remember to subscribe if you want to see more videos like this in the future. And also remember to leave a comment and let me know what your favourite stock is from this video, as it really is interesting for me to look at. And yeah, apart from that, thanks a lot for watching.